what I'd let you think about is how relevant receivables finance is to the challenges and opportunities that businesses face globally. We're in the UK today, and you think about the way exporters need to grow their sales. And they probably need to tackle new markets, they need to offer open account credit, they have to manage foreign exchange risks. These are all challenges that receivables finance is well suited to solve for. The other thing to bear in mind is probably more challenging economic conditions. Economists are predicting an increase in bad debts. I think we've already seen some of that. So the mitigation of risk provided by receivables finance is very relevant. Our ability to assess the creditworthiness of buyers and back that up with protection against bad debts is crucial. Interestingly, that's very strongly underpinned by our relationship with the credit insurance industry. It strengthens our ability to help clients. The other thing I'd highlight is just supply chain resilience. Big topic, much more focused since pandemic. Receivables finance, very relevant, injecting liquidity, injecting risk mitigation, alongside our sister product, supply chain finance, very relevant. We've just, as a bank, published a new piece of research which looks into the challenges faced by customers, well underpinned by research. That highlighted the degree to which the corporates are preparing for uncertainty. And if I give you a prediction, is that receivables finance will be hugely relevant to reducing uncertainty, managing risk, providing liquidity. Really important, absolutely vital. It's crucial to us. If you think about the challenges that we face, we've got to support our clients in selling, in offering open account credit. We've got to protect them from bad debts. The partnership with insurance is invaluable because the insurers provide us particularly with the ability to get insight into businesses who are not our customers. Their credit information sources are very extensive, their analysis is a real complement to the work that we do. In addition, insurers protect us from bad debts. So it's the analysis of the customers, checking their suitability for open account, and then backing that up with protection against bad debts. I know from personal experience that the insurance industry will help us be protected from shocks. The other thing, of course, that insurance can now provide banks is help with the efficiency of our capital. And that is important to offer us the ability to offer the most competitive pricing to support our clients. It's a very exciting time to be in receivables finance. There's just so much going on. But I would highlight the gap, the supposed gap in the provision of working capital. I was at a presentation last week with the Allianz trade economist, and he highlighted just how big that gap is, but also the consequences. There are consequences for businesses, there's consequences for society, because people with entrepreneurial ideas, if they've got access to liquidity, if that gap is filled, they can grow successfully. They can pay their creditors. You get into a beneficial cycle. But if you don't have that liquidity gap filled, that idea is frustrated and growth is slower. Now, receivables finance makes a big contribution to that already. As we know, the more sales to creditworthy customers, the more access to liquidity from receivables finance, so you can support the growing business. And you can do so based on the current value of the receivables rather than the historical balance sheet. What's very interesting now is about the digitalization of trade, which improves the ability of accessing good quality information. That will help improve the efficiency of our decisions. It will improve our appetite. It will also help us keep out bad actors. And that will support businesses and help us address that trade finance gap. The other thing I just sort of conclude with, if you allow me, is also to highlight sustainability. Now, there's got to be a huge investment in capital items. Now, one way of financing that is to turn it into receivables and lease receivables. You have the ability to pay for things things that will save energy related to the benefits that accrue. Now, that's a new form of receivables finance, but if you've got the right skills, right risk mitigations, it's a big opportunity.